Hey, good morning. All right, it's 8 o'clock. The market is opening in about an hour and a half. This is down and dirty, straightforward basics to get you started. I have been asking you guys for years to open your investment account, and I've gotten messages that some of you have already done that. You've had accounts sitting there, or you just opened it. Number one, you need to open a brokerage account. Now, I'm going to tell you what I did. I am not a fiduciary. I'm not a fancy licensed investment manager. I'm a mom who did this, and I'm going to tell you what I did. And honestly, it changed our financial picture. My husband was able to retire early, and but let's just get started. And just to let you know, there is no get-rich-quick scheme. There's no get-rich-quick scheme. If somebody is offering you that, run. Bottom line, this takes time. And I know people don't want to hear it because they want the wins now. They want the money now. It takes time. An oak tree doesn't get that way overnight. So be prepared for a marathon and not a sprint. Okay? I started the beginning of 2019, end of 2019. So I've been doing this for about 5 years, and I've had amazing results. You've got to be willing to invest in yourself and invest in time first. All right, so brokerage account. If you haven't opened it, I am telling you, I'm with Schwab. So whatever I reference is going to be related to how Schwab works. If you have an account with Fidelity or Vanguard, those are the big names. Those are great. If you have an account with Webull or Robinhood, those accounts are different. They're not the big names. You're going to have some trouble. So keep that in mind. If you are out of the country, we have some members here who are out of the country, you're going to have to do your own research. And bottom line, what I've found here in America is the big names usually have the best customer service. They're pretty similar, but the big popular names that have been around for ages that the actual traders use, the rich people use, the big names. And here in America, they're pretty much Fidelity, Vanguard, Schwab. Schwab took over TD Ameritrade, which is what I started with. So that's your brokerage account. You got to get that open and put some money in. And if you've been in this group, if you were here with us last month, I know you have money. You should have a couple $100 at least. Most people that do that grocery challenge, they find they have at least $600 extra that they've been wasting on luxuries and things they didn't really need to survive. Some people have found up to $1,000. So you're using part of that to pay down your debt more quickly, which is awesome. But you can also use part of that to invest in yourself and your future. So that's number two. Number one, you got your brokerage account open. Number two, you're putting money in it. Now, when you put money in your brokerage account, what happened to me is I was a little scared. Maybe you're scared. I was like, oh my gosh, am I going to lose it all? I started with $100 in my brokerage account, and I knew that if I lost the $100, we would still survive. We'd still have a roof over our head. We would still be able to eat. So when you put your money in, be aware of those things. That's what I did. Make sure that that money is not the money that you need to pay your rent. This is not a lottery ticket, okay? Make sure that it's money that you know you can live without. Because you're going to be living without it for a while. You're going to be letting it grow. It's going to take a little while for it to grow. Now, I'm going to move into what I did when I bought my very first stocks. Okay, now before I tell you what I did, before I bought my very first stocks, I can tell you a little story. You may have heard it before. And I see a few people have joined us. Carmela, so happy you're here. Grace, you're so awesome, you guys. So good to see you. If you do have questions as well, you can pop them in. So this is our first mini class. I want to get it started because a lot of stuff is happening in the markets that I want to let you guys know about. But you've opened your brokerage account and you've put money in it. And when your money is in it, it's kind of like it's in a savings account. It's just sitting there. You're going to earn a little bit of interest, but it's just sitting there until you make your first purchase. Trisha is another person, just reached out to me. She made her very first purchase today, and she did it on her own. She just bought something, okay? I gave her a few suggestions though, but the first purchase, you're getting familiar with how to use this stuff. All right, here's the story. This is why it's not a get-rich-quick scheme. I want you to think about this story. You've probably heard it before, and after I tell it to you, you might want to look it up and study it, because this is what we're talking about. If I said to you right now, Carmela and Grace, and you if you're listening to the replay, hey, 30 days from now, I'd like to give you some money. But you have a choice. 30 days from today, would you like me to give you $1 million? Or I could put that in an envelope today, you'll get the $1 million in 30 days. Or I'm going to give you a penny today, but I'm going to put it in a magic box. And every day for the next 30 days, that penny is going to double. But you have to tell me today which one you want. Now, most people, and when I first heard this, I was like, yeah, $1 million, sure. That's the one to take. But our mind cannot comprehend the power of compounding. That penny the first week, like, what is it, 78 cents? I mean, look it up. I don't know the numbers. The next week, it's a couple of dollars. Maybe it's $10. The third week, okay, you're looking into a couple hundred, maybe a couple thousand. You're like, it's the third week. There's no way it's going to get to $1 million. But as it keeps compounding, it grows exponentially. And that final day, it's going to be over $5 million. Okay, so this is what you have to remember for compounding. It starts out slow. When I first started, that first year, my dividends, and we're going to talk here about stocks that pay you. We're talking about unearned income. You are working hard for your money. You're going out there working for a paycheck. You are working and slaving and sweating and use your body to get the paycheck. Now, Grace, I know her husband is a farmer. We all would be dead without farmers because we need to eat. That is an incredibly hard job. Yeah, he knows what it's like to work for your money, to work for a crop. To work for a crop, you plant it in the ground. You don't know whether it's going to pop up, but you have faith that it will. And then when it does pop up, you protect those little baby seeds. And as it's growing, you might get some storms. I mean, some of your crop might get wiped out, but some will survive. That's how it is for planting your seeds in the stock market, for planting your seeds in a cash flow asset that will pay you. So you're not working for your money anymore. You're sending your money out to go work for you. That's what you need to remember. So, based on that, this is what I did. I invested in stocks that paid me a dividend. Now, there's all sorts of dividend stocks. We're going to talk about the difference. The first year, I was making maybe $30 a month in dividends. It was not a lot. I was like, I got my first $5, my first $10, 30, 40, 50. I'm like, dang, it's taken so long. All right, remember, think about the penny. Like, it's taking so long. That's how I felt. Then started getting like $100 a month in dividends. Then 200. My son right now, he started with me when he was a teenager. And today he is, he just turned 22. He's got about $20,000 in there, and he's making $500 a month. That's not bad. So again, he did not put $20,000 in there. He put less. But over the 5 years, the value of the account was growing. So I don't know, I don't know how much he put in. I'd have to look. Maybe he put in $10,000, maybe he put in $15,000. So it's like magically another $5,000 appeared in it. That is the compound growth. And now he's making $500 a month. If he never puts another penny in, he's going to have a couple $1 million by the time he retires. I wish somebody taught me that when I was a teenager. It's life-changing. So I'm not doing this just to help you. I'm doing this so you can help your children, help your nieces, help your nephews. This is life-changing. But with great power comes great responsibility. This is not something with greed. That's why it takes so long. You will become more of who you are the more money you have. If you say, I will start giving to charities when I become a millionaire, you won't do it if you're not doing it now. So do it now. Become a generous giver with your heart, with your time, with your money. Okay. I will get into stocks that I purchased, but this is so important because you do not want to become a Scrooge. We all know the story of Scrooge. We don't want to be a hoarder. Okay, money doesn't do good unless you spread it around. It's a quote from a play called Hello, Dolly. Money's like manure. It doesn't do much good unless you spread it around. And the more you spread it like seed, the more crops you will get. All right. So here again, you have the brokerage account. You have transferred money into it. And maybe you've bought your first stock. What I did is I bought stocks that paid a dividend. And I set rules for myself. I chose how much money I just wanted to keep aside in cash for emergencies or for opportunities like we're in right now. This market crash that we're in right now, these things happen every 5, 6, 7, 8, 9, 10, 12 years. They always happen, and then they go back up. In 2008, the global financial crisis, I remember everybody lost, the value of their accounts dropped by 20%, 40%, 50%, 80%. Their accounts dropped. 401ks crashed, but they came back up. Now, what people do when that happens is they panic and sell. They always say, buy low, sell high. But everybody sold low because they were panicking. The stock market, ups and downs, ride on people's emotions. They don't ride on logic. They ride on people's emotions. And a lot of that is driven by the big money makers that push the market. So there are ways around that. Just giving you a heads up for that. So what I did is I said, hey, I'm going to keep aside out of that $100, maybe I'll keep $20 off to the side in cash. That leaves me with 80. Maybe the next 20, I will buy super high paying dividend stocks. You can find dividend paying stocks that are giving you a 50% dividend, a 30% dividend, even a 100% dividend. And there's a stock right now that's giving a 150% dividend. All right, that sounds outrageous. I mean, you're going to make your money back plus, in the next 12 years if you buy one of those stocks. But it tends to happen. The higher the dividend, the higher the risk. You could lose all of your money in that one stock that pays a crazy dividend. It's a speculation, it's a gamble, but it's okay to have a little of those in your portfolio. So I thought, hey, 10, 20 bucks, I can get the crazy high risk but high reward stocks. So 20 in cash, 20 in high risk, that leaves me with 60. So I thought, well, I could put maybe 30% in the blue chip stocks, the stocks of companies that I know are not going to go out of business, that pay kind of a low dividend, but I know there's a lot of security. And then that would leave me another 30 bucks for the stocks that have a cash flow, the stocks that have kind of an in-between. They're not a crazy high dividend, but they're not a low, super stable company. They're just a middle of the road where you can find stocks that are giving you a 7%, 10%, 12%, 15, 16% return on your money. You're basically buying a basket of goods, a basket of businesses that are paying you to hold them. So I want you to think of real estate. Now, I know definitely, Grace, I'm so glad you're here. You have real estate, Grace. You have purchased a property that gives you a cash flow. Now, your property, I know you have property taxes, you have maintenance. If you don't hire a manager to manage your real estate, you've got to do it yourself. So you're kind of still working for your money. It's still a good investment, but you're working for your money. You got to put sweat into it. With these stock purchases, you're no longer working for your money. You are investing in companies, and then you're hands off. So that was my personal overall plan for where I wanted to put my money. All right, so now think about that in percentages. Think about how much money you're investing. Maybe you have $1,000 to invest today. This is a historic all-time low, and today you're going to get a lot of stock real estate on sale. You're going to get tons on sale. Grace, imagine if you were to buy another property that's going to cash flow, but that house is on sale for 50% less than you paid for the first one, and a property manager is included, so you don't have to do any of the work to get the money. Like, that's a no-brainer. You would do it. So really, right now, where we're at, it's at historic lows definitely over the past year. There are stocks whose prices are on huge sales, and as women, we love the sales. All right, so I'm going to go over my basket again. I put $20 of that $100. I put $20 in high risk speculation gambles, but it could have a high reward. Now you might not want that sort of risk. Maybe you're like, dang, 20 bucks of my 100 in a high risk, that scares me. Okay, do 10 bucks, do 5 bucks, do whatever is comfortable for you. Have some cash still set aside. Then we're talking into the kind of normal investments. I'm going to tell you exactly what I have purchased recently. I have found, and a lot of times they always say you want to invest in what you know. The high blue chip solid stocks that have been paying dividends or growing their dividends for over half a century, Pepsi-Cola and Coca-Cola. I bought some of that on sale. When you buy these stocks on sale like they are, you're going to see a higher dividend rate because you're locking in that dividend rate. When you buy a stock, if you buy a stock for, I don't know, $10, you're buying a share of the stock and the company pays a dividend. So if I bought a stock for $10 and it paid out $1 in dividends, you know that's about a 10% return on your money. So you're buying a share and that share will give you a specific dollar amount for the dividend it pays. So if I bought a stock for 10 bucks, I know I'm going to get $1 dividend over the course of a year. But if that stock dropped to $5 and I'm still getting the $1 dividend, I've increased my percentage. I'm not sure if that makes sense to you. If it doesn't, let me know and I can re-explain it, or you can rewind when this is over. But you're basically getting the same dollar amount of dividend, but you're paying less for that. So it's like you're getting the same house. The renter is paying the same amount of monthly rent, but if you got that house at a foreclosure, your money is returning a greater percentage. All right, so I took the advantage in this market over the past 2 days to buy some of those blue chip stocks that were just really pricey for me. So I did Coca-Cola and Pepsi. Didn't buy a whole lot because they're kind of pricey, but it locked in for me about a 4% dividend. And I know that those companies are not going to go out of business. Those are stable companies. They're not going to go out of business. I can't imagine the world all of a sudden they're going to stop drinking Coke and Pepsi. They're going to stop drinking soda. Like, I can't imagine that. So for me, I don't even drink soda, but I see everybody do it around me. I'm familiar with the names. Those are those blue chip stocks that bring stability to your portfolio. So I got some Pepsi-Cola and Coca-Cola. I'm not telling you to do this. I'm not telling you what to buy. I'm not a financial advisor. I'm not a licensed money manager. I'm none of that. I am just a mom telling you what I did. So I bought those. I also bought a company called Altria. Their stock initials are MO. That's another blue chip stock that's under the radar. It has to do with, they sell tobacco, they sell, people call it a sin stock because people like to smoke, they like to drink, they like those type of things. Through all of recorded history, people have drunk, they've smoked. Loud car. And this company has been around for years and they've grown their dividend. I think right now you can lock in maybe a 7 or 8% dividend, but they're not going out of business. People are not going to stop drinking and smoking. Now, if you have an ethical issue with buying that, there's plenty of other things to buy. Again, those are the blue chip stocks. Those are the ones that are going to give you stability. That's what I bought. Now, there are other stocks that pay a higher dividend, a higher cash flow. One of the ones that I bought was, and some of these are real estate investment trusts. So that's a way, if you cannot afford to invest in real estate, if you can't afford to buy a house or an apartment complex or something to rent out, you can invest in real estate through the stock market. It's called a REIT, R-E-I-T, a real estate investment trust. There's plenty of them out there. PSEC, P-S-E-C may be one. Annaly, N-L-Y might be one. And then you don't have the headache of managing it. Okay, those types of stocks are what I bought, and you can get anywhere from a 7 to 15% return. So you're building your basket. You have the stable rocks, not a high dividend rate. You have the cash flow ones that are giving you, 8 to 15% return on your money. And then there are some crazy ones. I think there's one called MSTY that I bought. Don't put a whole lot in it. It's a gamble. That one, you might double your money at the end of the year. That one might be giving you a 100% return on your money, a 100% dividend. Crazy. But again, it's risky. So you want a balance of those. That is my opinion as a mom who started investing 5 years ago. And, the overall return that you could get, could be 15% return in your overall basket, maybe 20% if you have more risk. This compounding over years, and again, it's a marathon, not a sprint. It's going to be compounding, and it's going to start paying you significantly, but you got to put the time into it. Now, if you can get out of debt in 5 to 7 years, as I've taught here, imagine taking all of that money that you were paying towards debt and investing regularly. You want the consistency, just like, if you want to lose weight, if you want to stay fit, you are not going to lose 50 pounds in a week and look like a supermodel. We all want that. It's going to take time. 50 pounds, maybe that'll take a year. Maybe it'll take 2 years. And if you want to keep it off, you've got to keep doing the same things. It's how it is for investing. Consistency over time. And when you start this, what I did is I put aside a certain percentage of my paycheck every month, and I set up my account so when I got the income, the money, the paycheck, that a certain amount automatically went to my brokerage account. It was automatically transferred so that I would not even need to think about it. And then I would go in my account and I would just buy a stock here, a stock there. I would add to my portfolio. And that's what I did. And again, Patty, Cassie, good to see you. All right, so we're about to wrap up here. I think that's a lot for our first mini class. This is going to get you started. I gave you a few ticker symbols. You can look up and see if it fits your particular risk profile. You have to know yourself. Are you a patient person or not a patient person? Are you afraid of risk? You're not going to buy those high speculations. You're going to do what you're comfortable with. You're going to set up your basket with percentages that fit what you're comfortable with. You can change it. something to get you started. You have a few ticker symbols to get you started. And I recommend, even if you don't understand it, you're going to want to look at your investment account. You know, if you can look at it every day for 5 or 10 minutes, just pop in and learn. Just pop in and learn how to use the software of whatever investment account you're doing. You know, put a couple bucks in every week, at least every month. That's what I did. That's what my son did. Again, I started when my son was a teenager, teaching him these things. He's got $20,000 in his account now. He didn't put $20,000 in. He might have put 12 or 15, and it's grown that way because of dividends. Oh my gosh, and this is the final thing. You have to put it on drip. You have to find the little button that says you want the dividends reinvested. DRIP means Dividend Reinvestment Program. That's where it's going to grow. You're going to have the stock, repurchase stock. So TD Ameritrade did it automatically. With Schwab, every time I buy a new stock, I've got to go in and find a little button to check, yes, I want the dividend reinvested. So if I bought that high speculation of MSTY and I didn't hit the little check mark saying reinvest the dividends, buy more shares, I'd be upset. But I only have to do that once. So for MSTY, I just had to do it once. For NLY, I just had to do it once. For MO is Altria, I just had to do that once. I'll give you the names of a few other stocks that I purchased recently that I saw were on sale. MMM, that's the 3M company. Now, I don't know about you if you're moms, but we bought a lot of tape and glue and things like that to do crafts. 3M is a company that's been around for ages, and I don't think they're going out of business. So I bought some of that, yeah, just go back, look through those tickers. You consider whether some of those, I think they're about $5 a stock, like, you know, under 10. So you can get started in the stock market for less than 10 bucks. Get a feel for how it is. The other stocks like Coca-Cola and Pepsi, I think Pepsi was around $160, $170 for one share. That's a lot. Coca-Cola was between 60 and 70, I think, for one share. That's a little better. The other ones I mentioned are less than 25. Some are less than 10. So I hope that helps you get started, and we can have another class and go deeper into it, but get started. It's going to look a lot different when you buy your first stock and you see it go up and down. If you put $100 in, it's possible that this market could go down even further. And then you open up your account the next day and you're like, I put $100 in and now it's only worth $80. Oh my gosh, I lost 20%. That's going to happen. That happens all the time, but then it's going to go up. It's going to go up and down. Take a look at charts. All right, I'm going to give you 2 websites, and then I'm going to cut this off and let you get started, because the stock market is going to have the opening bell. I think it's at 9 Eastern time. But take a look at Trading View if you want to look at charts, and Seeking Alpha if you want to find out the dividend that the stocks you're looking at pays. So Trading View will give you the chart so you can see the ups and downs. and you type in your ticker symbol, and you can see the price action. Seeking Alpha, if you want to buy a stock and you're like, how much is it going to pay? How often is it going to pay? You can go to Seeking Alpha, type in that name of the stock, and it will tell you if they pay their dividend monthly, quarterly, or yearly, and they'll tell you how much per share, and they'll give you the percentage rate. So that is a lot right there. That's a lot to get you started. And I'm just really proud of you, because this is what the rich want to keep from you. This is what the ultra wealthy people want to keep from us. The little middle class useless eaters is what they like to call us. This is why this is not taught in school, because somebody, whoever is managing all of these things, the marketing, colleges, schools, elementary, high school, they're not teaching this. And it's on purpose. So this is where freedom lies for us, for our children, and it's not being taught. And that's why people come out of college having the debt equal to a mortgage, but not having a house to live in. So this changed our lives. This will change your lives, but most importantly, it will change our children's lives. They won't have to be debt slaves. They'll be able to have financial freedom, but you also need to know how to handle that amount of financial freedom. Be a generous giver. Give of your time, your heart, your money. And God designed us to be free. He wants us to be free. It's not a greed thing. He wants us to be free, and our children to be free. So part of that's financial freedom. Part of it is. But don't focus on the money part. Focus on the freedom part. All right. We'll see you soon. Let me know your questions, and I'll do another one of these.